IT is the latest sector to join the big rally. Apurva Prasad, research analyst at HDFC Securities, is with us. Apurva, great to have you with us here. Thanks very much. Has anything changed on the ground is the question. Stocks have moved and big moves. The index is up 7% last week, 11% over the last 2 weeks. But have you spoken with, companies and what are they telling you?
Sure. Good morning. So Prashant, we've been doing our checks, and if I look at the lead indicators, most of these suggest that pressure on discretionary sort of still continues. Look at indicators such as tech job postings or some of the hiring metrics. Those still continue to be relative lower levels. Having said that, what we're looking at is some sort of a normalization as we look into FY25. So I think that being one element. Second being with a lot more focus on margins and some of those factors determining the operating profile is a lot more favorable for the sector. So I think these two become a lot more prominent. And if I can add, the third element out here is the mid-tier IT outperformance, which I think should continue going forward. So I think the overall growth premium that most of the mid-tier IT gets over tier 1 IT, that looks to be a lot more secular and sustainable.
Okay. Apurva, hi, morning. Thanks very much for joining in. This news on Infosys and the salary revision letters that they've given much earlier than what is generally the norm for the industry, how would you read it?
So it's actually, these were deferred, and they are sort of been giving the wage hikes which were deferred from first quarter and some from the second quarter. So I think it's probably more an indication of what was pointed out earlier. So yeah, it's not an advancement; it's more a deferment, and those are some of the elements which did enable most of these companies to hold margins despite what we saw over the past 2 to 3 quarters. There were companies where the revenue run rate was lower by about 8 to 10% in the last 3 quarters, yet they were able to hold margins. A lot of this was attributable to the fact that wage increase, which is the biggest cost element, those have got deferred. The good news is that that's coming back. And that is some sign of demand. So at the same time, if you see over the past 2 quarters, there have been mega deals that have come through for most tier 1 IT companies. And what that does is not just give a relatively stronger exit to FY24, but a decent probability of recovery in FY25. And with most of those deals, the ramp-up schedule looks to be pretty much on track.
Yeah.